Let's bring in Terry Belton of JPMorgan, truly one of the street's authorities on derivative instruments. I know, Terry, sit down here, and you got to sit down first, because if I ask you about Raj, you'll get up and leave. You're not supposed to comment on this stuff, I understand. But this idea of insider trading with your decades on Wall Street, does it put a cloud over business? Is it just a gauze of the time?
It does. I mean, I think, the justice is served, I guess, today, and I think that should give the public confidence that those kinds of activities aren't going to go on without sort of some consequences. Research reports that you write, are they dramatically scrutinized differently now than they were 15 or 20 years ago?
I
think so. I mean, compliance, for people in research, it's all about integrity and compliance. They're much more heavily scrutinized than they were 10 years ago. And I think part of the main sort of operating, approach to doing our business for people in research is, you lead with integrity and values. So.
Sounds like you're running for office. Let's go over to Dreddit first chart with Terry Belton. Belton says spreads narrower, at least in the high yield area. You parse between the less quality bonds and those high grade bonds. You want to bet with less quality now. Why?
Right. We like risky assets here. We think the economy is growing around trend. It's not a super story in terms of growth, but it is a story around trend-like growth and very good corporate profits. Default rates very low, so high yield bonds are a good place to earn carry right now.
Let's look at this chart here also of the deficit. We've seen this chart in a number of ways. This is debt subject to limit. You just wrote an, I thought, substantial essay on this whole debt limit. Is that proper English? The debt limit approacheth? I'll go with that. It's like a medieval kind of thing. What did you learn in writing your essay on the debt limit?
Well, I think there are two related but separate issues. One is the debt ceiling, which is for Treasuries $14.29 trillion. Right now we're tracking so that we will hit that ceiling next week, and Congress or the Treasury will then begin to execute some extraordinary measures to create some more capacity. That'll give them another $190 billion roughly, and a couple of more months before we run into that limit. We'll be there early August, mid-August.
Let's bring back this chart again, chart 2. I want to look at the slopes of this chart. The rate of change here, Terry, isn't so good. I mean, you've got one slope, then you got another slope, and you got that new slope. You can see the 14 folks over there on the left side, $14 trillion. Is the debt limit more politics, or is it more your area of finance and economics?
The debt limit is more politics, I guess. We're one of the few countries in the world where we agree to a budget. We have a budget process that agrees to a level of spending and a level of taxes each year. And separately from that, we have a decision on the debt limit. And the debt limit now is really something that is the fact that we're running up against it reflects spending decisions that were made, in the past. So we've uncoupled those, and that creates some political theater and some issues each year when we run up into it.
This is a critical question then. Is there theater for you in finance, or is it just the area of politics?
I think in most years, the debt ceiling and the potential to run up against it is very much on the back burner. It doesn't really affect markets. Yeah. This is a different situation. Okay. This is akin to what we had in 1995, a divided Congress. In this case, we're using the debt ceiling and Congress's willingness to raise it as a leverage point to try to reach agreement on longer-term fiscal discipline. And that's a serious measure, something the market is concerned about and will become increasingly concerned as we go through the summer.
Another idea here, folks. Earlier this morning on Bloomberg Surveillance, I spoke with Julia Coronado, Chief Economist, BNP Paribas North America, and we discussed current concerns over stagflation.
deflationary threat, that whole debt deflation threat that we seriously worried about even as recently as last year, that's the worst case scenario. So it looks like central bankers have been successful in avoiding that. But another pretty bad scenario would be stagflation. And I don't think it's the most likely outcome, but it's certainly something that's making us a little bit concerned given the softness in some of the numbers we've been seeing.
Yeah, CME resuming trading as well. We just said they were halted for a bit, and they've resumed trading here with some difficulties. The market down 139 points. Terry Belton, we talked there of stagflation. I would say the Bruce Kasman view is more optimistic than it. How do you invest now in the fixed income space if we're looking at this modestly higher inflation with a tough nominal and real GDP?
Right. I mean, for us, I think it is an environment where you should be overweighting risky assets. We're underweight duration. You know, we do think yields where they are right now don't really offer value in the Treasury market. We're at the rich end of the trading range. We're at the lows of the year in Treasury yields, and these are levels that are much more consistent with an economy that is growing not at 2.5% to 3%, which is what we're looking for this year, but an economy that's much weaker than that. So we want to be underweight duration. We like overweighting sort of the riskier end of spread products.
You're going to buy Greece 2-year notes?
No, Greece, we especially would avoid the two-year sector.
How has the derivatives business changed in the last 2 years? The sophistication, is it getting more nuanced and more sophistication, or is it back to basics?
Well, it's undergoing change, and I think it's changed a bit in the last 2 years. It'll change even more in the next couple of years, mostly due to Dodd-Frank.
Right.
And that is likely to transform the business as things move on to central clearing and move on to swap execution facilities. So it's in the middle of quite large and dramatic change.
Well, thank you for coming in today, and particularly letting Raj get out in front of you with the news on insider trading. Terry Belton, folks, JPMorgan with us.